Hello and welcome back. This is Christopher Aaron. It is October 28th, 2021, and this is going to be a special educational video on the power of warrants in your investing. I want to explain to you what warrants are. This is a total game changer if you start to understand this. We're going to be talking about warrants in precious metals mining companies. For those investors who are looking to really have the opportunity to hit some major home runs, I'm talking about some investments that have the potential to change your life forever. It's through the power of warrants that these opportunities will be coming over the next couple years only. So I want to explain this to you. This is going to be a different style of video. And I want to show you why this is so powerful. You know, this is what I have been doing myself as we look at the legal disclaimer here for one moment. This is what I have been doing myself when I am investing in these gold miners, is to invest in gold miners with warrants as well. And I want to show you why it's a total game changer. When you start to understand how powerful this is, it just blows away every other form of investing that I've ever seen. Personally. So what I want to show you first is just a backdrop here is why we are favoring the gold miners right now relative to physical gold itself. I do think there is a merit to owning physical gold. It's your insurance wealth. It's your come hell or high water, what's going to bail you out if there's a breakdown in society. It's your real savings account. However, when we look at the available data of the ratio between gold miners relative to the price of physical gold itself, and we have here, this is almost 40 years of data. And you can see for almost 25 of those years, there was this historical normal ratio between the value of the gold miners and gold. And remember, the higher this ratio is moving, the more the gold miners are worth relative to gold. The lower the ratio, the less that the gold miners are worth relative to gold. Now, one important thing to remember here is that this ratio cannot go to zero. It cannot go to zero. Why? Because ratios between real asset classes cannot go to zero. And this basing process here that we've been in for the last 7 years, you can see after the crash of 2008 when capital froze for mining projects, and then shortly after that you had the 2011 peak in gold, and the sector really was never able to recover from that 1-2 hit. The last 7 years here, this basing process has been the lowest that the gold miners have ever been worth relative to gold itself. Now you can see what's happening here. Again, this can't go to zero, and this is the closest to zero that it's ever been. You can see that we're breaking a series of downtrends here. You can see one broken downtrend, two broken downtrends. And what looks like is getting ready to happen is after another, let's say, year here or so, plus or minus, it looks like the gold miners are getting ready to break out back against their own product, back into the historical normal ratio. I mean, this is the message. There's no other way to read this from a technical analysis standpoint. When you see something that can't go to zero, which has fallen the most that it can fall, and then is moving sideways, this is a stage 1 base, and then you're breaking all the relative downtrends. Once this thing breaks the last downtrend here within the next year or so, it's going to move strongly back toward the historical normal ratio between gold miners and gold. And what this means from a data standpoint is that the gold miners are going to be set for this ratio to move back toward the 27.27 level here. It means the gold miners are getting ready to rise 260% on average. Some will rise a little bit more, some will rise a little bit less. This is with no increase in the price of physical gold itself. What this is saying is that the gold miners are set to massively outperform physical gold itself over the next couple of years after this final downtrend breaks here. Now, of course, what's actually going to happen is more like gold itself is going to rise, let's say from 1,800 to 2,000 or 3,000. And so these gold miners are going to rise even more. The other way that a ratio can compress like this back toward its historical normal levels would be for the price of gold, let's say, to fall by 73% with no decline in the gold miners. One way or another, for this ratio to revert back to a 25-year historical norm, which is the strongest data that we can possibly look at. You have a ratio that cannot fall to zero, closest to zero that it's ever been, breaking all the downtrends, getting ready to move back toward the historical norm. The takeaway here is that gold miners are set to outperform gold itself for the next 2 to 5 years. And we're in that window now. I think we're in the final year here before this thing really begins to move higher in favor of the gold miners. Okay, so this is a backdrop as to why we are favoring the gold miners right now relative to gold. You take a look, you pause the data, you tell me if you see anything different there, but that ratio cannot go to zero. Super valuations, incredible valuations for the gold miners relative to gold right now. It is where the real wealth is going to be made over the next half of a decade only. We're talking the next 2 to 5 years. So if you're with me on that, if you're saying, okay, I understand from a risk to reward standpoint here why someone would favor the gold miners if they already own, let's say, a nice chunk of physical gold, then we want to kick this into overdrive and talk about the way to really change your situation in life. And that is through investing in these gold miners with warrants. So let's talk about this. If you're new to warrants, here's a quick overview. What are warrants? Warrants are simply contracts. And they grant the holder the right but not the obligation. This is a very important distinction. The right, but not the obligation to buy shares in a company in the future and at a set price. So we'll talk about specifically what this means in just a moment. However, for now, the takeaway on this is that warrants offer extreme leverage in the investment world, similar to how options offer extreme leverage. Okay, let's talk about this a little bit more detail. In some instances, warrants may be available for purchase in the open market, just like you can go in and you can buy options, let's say on the price of gold, options on some of the gold miners. In some instances, you can also go out and buy warrants for a price. Now, one more thing. When we invest in gold mining companies by private placements, we receive warrants that perhaps you could otherwise go out and buy and spend money on. We receive these warrants absolutely free. Yes, you heard me right, for free. So what you're getting here by investing by private placement is you are getting extreme leverage to the gold miners, which we just said are going to outperform gold over the next few years, and you're getting that leverage for free. Now, in case you think I'm just making this up, this is huge, game changer. Let me show you a specific example that we just negotiated with a company, which is called Provenance Gold. This is a gold mining company based in Nevada in the United States. They're headquartered out of Canada. Their mines are in Nevada. This is a company, and you can see here in the news disclosure, just closed October 22nd. And with this private placement, we received one common share plus one warrant entitling us to purchase one more share at 20 cents for the next 3 years. Okay, so this is for real. This is a specific example that we have just participated in fact, that we just negotiated with the company so that our investors could come together and get favored terms and get these warrants for free. Now, what I want to do is show you an example here, again, using this real world data that has just closed. This is publicly available data. I want to show you how this actually works out across these different categories, to think about the pluses and the minuses here. So let's talk about the differences here between open market purchases, like if you just went out and bought stock in this company, Provenance, in the open market, which I do think it is a good company. It's going to do well over the next couple of years. That said, I want to show you how much better you can do in this company if you were to invest with us in private placements. So the share price in the open market right now for Provenance is 15 cents Canadian per share. However, this is a key difference. When we negotiate these terms by private placement, we are able to buy shares at less than the open market price. In this instance, we were able to buy shares at 13 cents. This is a 15.3% instant profit. Instant. You tell me where else in the world you've seen the ability to get a 15% instant profit. I mean, if you put your money in a savings account and you're earning, 0.5% per year, what does it take you 30 years to get a 15% profit? I mean, this is a no risk instant profit based on the share price difference alone of buying the exact same shares just by private placement versus the open market. Let's look at a couple of the other differences here between private placements and the open market. If you buy in the open market, again, you receive no warrants with that purchase. Whereas when we buy by private placement in this deal, you just saw the text of it, we received a free full warrant good for 3 years to buy shares at 20 cents per share. Remember, right now it's trading at 15 cents. So we received the right to buy shares at 20 cents in the future for the next 3 years. Once again, for free. And I'm going to show you in a minute how this works for additional leverage. Now, let's talk about minimum investment. In the open market, you can buy as many shares as you want. There is no minimum investment. If I were to say for private placements, what is the one consideration that you really need to think about? There is typically a minimum of $10,000 Canadian. So this is not going to be available. They say, what's the rule in life? Once you make money, it's easier to then make more money. Once you have money, it's easier to have that grow, right? So if you're only investing $500 at a time, unfortunately, you cannot participate in these private placements. Minimum is typically 10,000 Canadian, which is about 8,000 US, or about 6,800 in British pounds as an example. Okay, so there is the minimum to think about. One other difference is that in the open market, there is no minimum hold period. You could buy the shares and sell them the next day if you wanted to. By private placement, there is a 4-month minimum holding period. But you know what? For all the investments that we are making here in these mining companies and the individual miners anyway, we're going to be holding this long anyway. So I don't see this as a downside at all. I mean, you really need to give a company 6 to 12 months, absolute minimum, to see what they're going to do. So here are the pluses. And if I could say the one consideration really is the minimum here. You look at the 15% instant profit and the free warrants that you get. Guys, it's just game changing. I mean, if you want to talk about the opportunity to break out of the system, to make profits that are going to change your situation in life, to have that opportunity, it is by private placement. It is with these terms. I want to show you why. Let's consider scenarios here. Real world scenarios, how this could play out with both of these possibilities. So let's consider here that the share price from where it is right now, 15 cents in the open market or 13 cents if you're buying by private placement, let's say the share price doubles, right? It goes from 15 cents to 30 cents. This is not that hard to happen in the gold or silver mining sector. This happens all the time. So you get let's say a doubling, right? So for $10,000, you just work out the math. $10,000 at 15 cents per share, that's going to get you 66,666 shares. For 10,000 in the private placement, though, remember you're buying for 13 cents, not at 15 cents. And so look at this. You're getting more than 10,000 additional shares for the same amount of money. Do you see this? Over 76,000 versus 66,000 for the same investment amount. Because of that, because you're getting more shares, when you look at how the gains work out, when you get this move from 15 cents to 30 cents, which is a doubling of your money or a 100% gain in the open market, because you have bought at 13 cents in the private placement, that $10,000 doesn't just go to $20,000. That $10,000 goes to $23,076 for a 130% gain. This is just the shares. Now take a look at what happens with the warrants, okay? Once again, open market, you receive no warrants whatsoever. Whereas in the private placement, if you sell your initial shares for this gain, you then get the opportunity to turn around and buy more shares at 20 cents. Remember, in this scenario, they're already trading at 30 cents. So you receive an additional almost $8,000 profit here from the warrants. So you add this up, you look at your total return here for an open market scenario. Your total return for a $10,000 investment is you doubled that $10,000, 100% return. Compare this to the open market, to the private placement total return, a 207% profit when you compare the fact that you got an additional gain on the shares because you bought them for cheaper, and you have the gain on the warrants, which are given to you for free, a 207% return on the private placement. This is life-changing. The same. Now imagine if you were investing more. Imagine if you're investing 25,000 or 50,000 or 100,000, and you're talking about, not a 20,000 return here, but imagine you're talking about a $200,000 profit versus a $300,000 profit. You're talking about huge differences in your gains just for buying the exact same shares in the private placement. This is the power of warrants and private placements. Now, let's consider scenario B, because not every time that you invest is a company going to move higher. Sometimes you're going to have the unfortunate scenario. Let's say you buy shares at 15 cents in the open market, and let's say that it declines to 10 cents. Very reasonable, real-world scenario, right? So let's look at how this plays out here. Open market versus private placement. If you had bought, now same thing, you buy the same amount of shares as we were talking about in the last scenario. Remember, you get to buy more shares in the private placement because they're at 13 cents versus 15 cents. Now take a look at what happens. In this case, you have a 1/3 loss, 33.3% loss, because the share price is falling from 15 cents down to 10 cents, right? Aha. Look at what happens if you buy by the private placement. That 10,000 only falls down to 7,692. In other words, a lesser loss here. Only a 23% loss versus a 33% loss. Why? Because you bought the shares, once again, for cheaper. You bought at 13 cents. So you can see that your loss here in an unfortunate scenario is less if you bought by the private placement. Now, in this instance, remember, no warrants. You receive no warrants if you buy shares in the open market ever. We still receive our warrants here by the private placement. However, they're simply going to expire what's called out of the money. Out of the money means they did not rise above the necessary price within those 3 years that we received for the time before the contracts expire. Now, if you had gone out and bought warrants in a company, purchased them for a fee, and they expire out of the money, that would be a significant loss for you. That would be 100% loss on the value of those warrants if you went out and bought them. However, because we receive those warrants for free when we buy by private placement, we have no additional loss. If you get something for free and the value of that goes to zero, you just say, okay, whatever. It was for free anyway. So there's no worry about if the share price declines as far as the warrants go, since they are given to you for free. In sum, the total return here in the open market is going to be a 33.3% loss, the decline in the share price, and the total return in the private placement is going to be a 23% loss. A lesser loss in the private placement. Why? Because you bought shares at a cheaper price, and so you're somewhat mitigated against that decline. Again, guys, I'm not making this up. You just saw the text for that Providence Gold private placement that we just closed on here. And again, these private placements are not available in the public. You can't just go on, to some brokerage site and say, let me buy a private placement in X, Y, or Z company. You have to know about these deals before they happen. They come across very quickly. And when they come across, they are typically given to insiders of the company or associates of the company. And so you have to have the connections with the company, generally speaking, in order to participate in these types of lucrative deals. Just to summarize what we just looked at, let's say the beneficial scenario in which the share price doubles in the open market versus here if the share price falls in the open market, remember, your profit is greater if you invest with the warrants and at the cheaper share price here. And in the unfortunate scenario, let's say if the share price were to fall, your loss is less. So in sum, one way or another, you blow out of the water as far as profit here when you invest in the private placement. And if it's the unfortunate scenario B, your loss is at least mitigated, right? You benefit both ways, private placement versus the open market. This is the way that the investment world works. This has been a total life changer for me personally. I've been participating in these types of deals for the last number of years now, and the results are simply, you can see here the potential. This is an investment that I myself have just made, that our subscribers have just made, and so we are on the way to these types of rewards here. When you really understand this, if you go back to that first chart that we were looking at of the gold miners versus gold itself, and you say, okay, I understand that scenario. I'm bullish on gold. I think gold's going to go to 3,000 or 5,000 per ounce, which I agree to you over the next several years. And then if you look at how those gold miners are going to be outperforming gold itself by multiples, and then you say, oh, if I buy those gold miners by private placement compared to the open market, we get another multiplication of the profit potential there. This is just head and shoulders the best way to invest in gold mining companies that I have ever come across personally. I've been doing this for over 15 years in the gold mining sector, and I've been in the financial markets for 20 years now. This is by far the best way to do this that I have ever come across. If you've seen a better way to make more profit and to have lesser loss from investing in the gold mining companies here, please let me know. I discuss this with my colleagues. I discuss this with other insiders in these companies, with other associates that are doing these types of deals. And we are all saying, this is it. You learn this, you accumulate these warrants now, you get these types of profits now, you're going to be all set within the next few years. Gold miners are set to outperform physical gold. We looked at that in the very beginning. The private placements and the free warrants are a game changer. Why? Because you get greater upside potential, less downside risk, 4-month hold period. Remember, that's the one real downside to look at. If you wanted to talk about that, what else? You have to do the $10,000 Canadian minimum. So I'm sorry, but that's how it is. That's how the world works. But if you're at that level, if you're ready to invest some significant money and start changing your life, this is the way to do it with the free warrants and the better terms on the shares themselves. I am convinced. Think about it. How many people are investing in gold right now? How many people do you know personally in your life? Come on, guys. Most people are investing in Amazon and Facebook and, whatever crazy new cryptocurrency they think is going to skyrocket. Who's talking about gold right now? Are your neighbors talking about gold or silver? Are your coworkers talking about it? So these free warrants, I am convinced that within the next few years, these companies are no longer going to be offering these free warrants. I'm convinced. Because as soon as the share prices start to really rise on these companies, and they don't need to do that, I'm convinced they're just going to say, you know what, sorry, we're not offering warrants anymore. You can just go out and buy the shares. So the time to be doing this is now. The time to be accumulating companies at more favorable terms than the open market and getting the free warrants for that additional upside. The time to be doing it is now before it's too late. So this is what I'm doing personally. Really what I'm doing here is sharing with you my own personal journey as an investor, as someone who's been navigating both physical gold, physical silver, gold mining companies in various ways, and these private placements. What I'm sharing with you here is my own journey, what has allowed me to reach a new point in my life as an investor where more options are open to me now as far as where I can live, where I can travel, the things that I can do with my time, because I have been making these investments and these investments are really working. If you would like to do with us this type of investing, this is what I'm offering, okay? This is available as a service for higher net worth investors where we come together. We already have an incredible group of investors, but we are growing this group right now because the more investors that we have, we are able to go to these companies and negotiate terms with these companies directly so that, as you saw in that example with Providence, so that we can buy shares at instant profits. And so when you join the group that we have here, you are getting someone going to these companies on your behalf and negotiating these terms. These terms are not just offered to normal people out there on the street. Remember, you are getting the free warrants with every investment that you make that gets you almost 2 times the upside compared to the open market purchases. By the way, if you want to join us in elite private placements, you will receive a free subscription to our other open market investment service, which is called Precious Metals Intelligence. So you will get this for free if you join us in the elite service, the private placement service. If you are not ready for this type of thing and you would like to follow the open market gold and silver purchases that we are making, if you're starting in the sector, if you're just getting ramped up, there's nothing wrong with that. Everyone has to start at wherever they are. Everyone has their own reward and risk tolerances. If you would like to follow what we are doing in the open market, The service for you is called Precious Metals Intelligence. We do videos like you're seeing right now. We focus, though, not specifically on the private placements, but we focus on what's happening with physical gold, physical silver, the rest of the gold mining sector, the U.S. stock market, et cetera, et cetera. Okay, so this is more for the general precious metals investor. This is for the private placement investor. And I'm just telling you personally, these are the types of investments that I want to be making right now while we are in that window with the gold mining company to change my own possibilities in life going forward. If you'd like to speak to me one-on-one, if you'd just like to learn more about this kind of thing, I make this video here, these types of videos, simply to share with you what I am doing personally, what myself and my colleagues are doing. We gave you the real world example here of a company that we have just invested in, that Providence Gold, which I think will do really well. They have some drill results that are coming out within the next couple of months. So I think it's going to do well. I cannot guarantee that, of course. Nothing can be guaranteed in the investment world, but especially if you're able to buy shares at better terms, I think that really is going to work out with us. But if you would like to sit down and just talk about your situation, if you're not sure which way to go, if you'd like to learn more about applying this to your individual situation, just know that I can work with you by consultation. Just reach me on the consultations tab. We sit down, we discuss your situation. So I hope this video helps you to understand the power of warrants. Once again, it is a game changer. I truly believe that this is exactly what I'm doing with my own capital. This is what my colleagues are doing. We sit down and we discuss these deals every couple weeks. We discuss which companies we are going to invest in. We go out, we negotiate the terms with the companies themselves. You can find more about these programs. You can find more about gold and silver by watching our other videos. And make sure to click on the links below if you would like to check out any of these programs. Either way, guys, I wish you the best in your investing career. It is a crazy time that we live in now with everything that's going on in the world, but I truly believe, and the charts support this, I truly believe that this is the time to be making the investments to set yourself up for the rest of your life. Think clearly about what you are going to do, and remember, I will see you this time next week.